You will never get ahead or stop living paycheck to paycheck. You will never save money, and you will never be able to retire if you don't invest, because things are about to get a lot more expensive. And I find it really ironic that the people who are so anti-censorship and pro-freedom of speech always see these videos from me and they say, hey, stop talking about this. Only talk about finance. That's why I follow you. And I'll unfollow you if you talk about things I don't like. Go ahead, you can unfollow if you want, but this is really important. If Donald Trump passes his tariffs, this is from the CEO of AutoZone. We will pass those tariff costs back to the consumer. That is us, you and me. President Trump's proposed tariffs have already begun to upend businesses. Tariffs which include a 10 to 20% tax and a potential 60 to 100% tax on all goods from China, causing significant concern. Well, this is good. This is what he wanted. It'll bring the jobs home, right? Well, not so fast. Steve Madden, the shoe company, says that they're making some drastic plans. And these plans do include leaving China. There's only one problem. They are not moving production back to the United States. They will instead be sourcing goods from Cambodia, Vietnam, Mexico, Brazil, and some other countries. And this is also from the CEO of AutoZone, who said the company expects to raise prices even before the tariffs take effect, anticipating how those new policies will impact its margins. The CEO of Columbia Sportswear has also raised concerns and says that it is more difficult to maintain the affordability of their products, and they may be forced to raise prices to cover the additional tariff charges. According to their research, a $90 pair of sneakers might cost $106 to $116, and a $100 jacket could cost $21 more. And look at what it says down here. Footwear companies in particular are worried since nearly 99% of shoes sold in the United States are made abroad, and it is very unlikely that they're going to make production or move production back here to the States. And here's what Stanley Black & Decker's CEO said about these tariffs as well, especially in relation to moving the jobs home. Manufacturing their goods in the United States isn't considered practical because of financial difficulties. Rather, they will probably pass on any higher expenses to customers. Even dollar stores are not immune because many of their products come from China. So if you thought things were expensive when they were $1 and now they're $1.25, they might also go up in price. I have also seen stuff like this here below where it says some companies are going to wait and see what happens. And this is because a lot of mega corporations, hold on a second. A lot of mega corporations have something called a moat, a large moat. In other words, they have a lot of cash. So some companies that could be impacted by this, like the Home Depots, the Walmarts, the Amazons, who import a lot of stuff from China and aren't going to build stuff here at home, they might just say, let's give it a year, 2 years, 3 years, see what happens, and then we'll raise prices. This company right here, e.l.f., the skincare product, they said they're going to do the same. They're going to sit and wait until 2025 to see. So we might see some prices increase in anticipatory response, but we also might see some companies say, let's just hold out. So you might not see prices go up dramatically immediately. Here's how tariffs, inflation, and wage growth works kind of in like a cyclical pattern where you're struggling to get by, you can't really afford anything, you can't save, you can't invest, you can't plan for the future. And then eventually the companies all start paying higher wages, right? Maybe because of politics, maybe they pass a new law, they mandate it, whatever. And all of a sudden it feels like, hey, just maybe for a second, you can get above the surface here and catch your breath and think, okay, now I can start planning and I can start saving and I can start at least not feeling so stressed and worried about money. You're earning more, prices are stable, it seems like you're able to just live a little bit more comfortably until prices go back up again. Maybe it's due to COVID, maybe it's due to inflation, maybe it's corporate greed, but whatever the reason is, they go up. As The Rock used to say, it doesn't matter what the reason is, it's going to happen, right? Wages, prices go up. Wages go up, prices go up. Wages go up, prices go up. Wages go up, prices go up. And there is only one thing you can do to truly get ahead unless you are a huge wage earner. Well, actually, there's two things. The first step is live really, really below your means, which if you're below the poverty line or lower middle class, it's likely that you're already doing that, although we know a lot of people who are lower middle class tend to take on a lot of debt buying luxury items that they don't really need. So if you are in that group, start living below your means. But if you ever want to be able to save, plan, and retire, you have to invest. If I were a first-time investor, and I'm going to make this really simple, and then I'm going to show you some resources in a second if you want more information. The very first thing I'm going to do is I'm going to go to a brokerage like Charles Schwab, Fidelity, Robinhood, whatever. Don't worry too much about this, and go all the way over here to open an account. I am going to open two. One is an individual account, and the other is a Roth IRA. The Roth IRA is something you don't really want to touch. It's for when you're over 59 and a half, so retired, the future. The individual one, the individual account, is more for short-term needs, wants, plans. Maybe you want to retire a little early. How you invest is totally up to you. This is just one example. But I am putting a technology-based ETF in my Roth IRA. That's because tech stocks and tech ETFs can have disproportionately higher returns. Look, 459% in the last decade. I don't want to pay taxes on that shit. I'm going to put that in the Roth IRA. And by the way, max contribution for a Roth IRA is around $7,000. So if you are fortunate enough to be able to do that, max out the Roth and then focus on the individual account. In there, I would put in a dividend ETF and one S&P 500 index fund. Those ETFs were just examples. There are dozens and dozens of options, and I have a lot of playlists right here on TikTok that you can watch, including a Roth IRA playlist, an ETF playlist, a dividend playlist, all to make you more well-rounded. And unlike all of the other finance content creators on this app who say they're here to help, but they're really here to sell you some shit, everything on my website is free. Let me show you. All you have to do is go right here and click on the menu, which is right here, and everything is free, including my course. And you will note that there's no email sign up or anything. It launches right into the course, including videos like this one, Investing by Percent. I know that some people really just want to believe that the billionaires are finally working for the people, but to me, this screams nothing other than a long con. Earn your trust, get your vote, and then make the wealthy people even wealthier. The last thing I want to see happen to you guys is that you think, oh, things are just going to be hard for a little, but they're hard for years. And you have bills to pay. You have kids to support. You have mouths to feed. What happens? What goes? You get foreclosed on. BlackRock buys your home. You panic and sell your assets because you can't keep investments when you're struggling to eat. You got to sell some of your stock. Who buys those stocks? Millionaires, billionaires who can ride out these waves. The only way you will ever save, plan for the future, and retire is if you invest. Bulls make money, bears make money, pigs get slaughtered, and smart investors always smash that follow. Thanks for watching. See you later.